In July of 2025, on-chain data aggregator DropTabs pulled the wallet of a crypto investor, and it returned a number that was absolutely insane. The capital invested was $1.86 million, and the unrealized profit was $68.3 million, which was a return of roughly 3,600% in a market segment that most analysts had spent the prior 2 years dismissing as just gambling for losers. Now, the name of this investor was Murad Mahmudov, a former hedge fund manager, Ivy League educated, co-founder of a Bitcoin-focused fund, and a man who in September 2024 walked into Token 2049 Singapore stage and told a room full of skeptics that crypto's next era would be defined by something he called the Memecoin Supercycle. Most people heard Memecoin and stopped listening. That was the mistake, because Murad wasn't saying to buy meme coins, he was saying something much harder to hear. The reason almost no one understands Murad's thesis is he's not making the argument they think he's making. He isn't picking coins, he's pointing at a structural feature of how value works that is genuinely uncomfortable to look at. So here's his actual claim. Strip away the dog tickers and the cult language. This is it. Crypto markets are a democratized global consensus machine for belief. Tokens are the instrument in human history that lets ideas themselves be priced like equities, traded 24/7, and reflexively re-rated. When he calls a coin's community a cult, he isn't being dismissive, he's being precise. He's saying it has the structural properties, shared identity, sacred symbols, devout believers, and an organizing story that history has shown can compound into civilizational scale value. And the people who can't follow him are getting stuck at the first step, because to take his framework seriously, you have to accept something the entire modern finance vocabulary trains you to reject. Ideas by themselves are valuable. Not as a metaphor, but as an asset class. Now, this idea isn't original to Murad. It's not original to crypto. The clearest version of this idea was published in 2011 by an Israeli historian named Yuval Noah Harari in a book called Sapiens. And it has a name. It's called Intersubjective reality. Harari's argument, which is now standard in cognitive history, goes like this. Homo sapiens didn't dominate this planet because we were faster or stronger or smarter individually. We dominated because we developed the unique ability to coordinate millions of strangers around shared fictions. Now, these are ideas that exist only because we all agree they exist. Money is one of them. There is no atom of the dollar in the periodic table. A dollar is a story we all tell each other and price into our own behaviors. Religion is another one. A nation is another one. A corporation is another one. So Harari uses the example of Peugeot. The company called Peugeot has no physical existence. You can't point to it. Every car it makes, every factory it owns, every employee it pays, all of that could be destroyed tomorrow, and Peugeot would still exist as long as the legal and social fiction continued. Peugeot is, in his words, a figment of our collective imagination. And it sells $15 billion of cars every single year. The figment has a balance sheet. This is the move Murad is making with crypto. He's saying tokens are the next chapter in this same story, the next imagined ordered asset class, and the people who refuse to engage with it on those terms are misunderstanding what every previous asset class actually was. The skeptic's counter is always the same. Sure, belief is interesting philosophically, but it's not real. It doesn't produce cash flows. It's not worth anything. Let's check on that empirically. 2016 study published in the Interdisciplinary Journal of Research on Religion, led by Brian Grimm, calculated the annual economic contribution of religion to the United States economy alone, and the number was $1.2 trillion, more than the combined global revenues of the 10 largest tech companies that year, more than 50% larger than the global revenues of America's 6 biggest oil companies combined. If US religion were a country, it would be the world's 15th largest economy. Higher end estimate, which includes the household income of religiously affiliated Americans, came in at $4.8 trillion, about a third of total US GDP, produced by something the fundamentalists will tell you has no value because no commodity is exchanged, no factory hums, and no engineering ships. Now, add in the global wellness and spirituality sector, meditation apps, yoga retreats, astrology, that's another $1.5 trillion annually. The halal economy alone is $2 trillion, and none of that is hypothetical. These are real dollars moving through real ledgers, and all of it is priced on belief. Now, ask the fundamentalists their own question back. What's the value of friendship? What's the value of mental health, of meaning, of belonging? If their analytical frame can only price what's tangible, then they would have to assign 0 to all 4 of those, and we know that's wrong. In fact, those are the things that most people will tell you are the most valuable parts of being alive. So the skeptic isn't holding a more rigorous position. They're holding an incomplete one. They define value to exclude the largest part of human economic activity, and they're using that incomplete definition to dismiss the market that is finally learning to price it. For most of human history, there was no instrument that let you buy a share of a belief. You couldn't tokenize a religion. You couldn't allocate capital to the idea of patriotism. You could donate to the church, but you couldn't accumulate equity in the meme of the church. Crypto changes that. It is mechanically the first technology that lets any sufficiently coherent idea, community, movement, shared identity, ironic joke be issued as a tradable claim and repriced in real time as belief in that idea strengthens or weakens. When Murad talks about evaluating a cult coin, he isn't doing anything mystical. He's running the same analysis a religious historian would. How deep does the shared identity go? How devout are the believers? Does the story have enough universality and emotional resonance to compound across cycles? Are the memes, language, in-group symbols durable enough to survive a 50% drawdown or even an 80% drawdown? These aren't stupid questions. These are the questions the Catholic Church asked itself in the year 1200 and the questions Apple's marketing department asks itself today. Murad is just being honest about the fact that crypto lets you bet on those answers with capital in real time with 24/7 liquidity. That is not gambling. That's a new instrument being correctly used. There's one objection left, and I want to take it seriously because it's the one I take seriously. Belief markets are unstable. People don't believe forever. The Roman gods had a market cap, and it's probably a lot less right now. What stops a token cult from going that same way? Absolutely nothing, and Murad would agree with that. This is why the framework is probabilistic, not deterministic. Most belief decays, most cult coins go to zero, most religions vanish into history. Out of the thousands of belief systems humans have invented, only a handful like Christianity, Islam, Hinduism, Buddhism, and a few others survived past 1,000 years. But that doesn't invalidate the asset class. It defines the return distribution of the asset class. The same way most venture-funded startups die and their survivors return a fund, the same way most companies in the S&P 500 in 1955 don't exist today. The fundamentalist mistake is to look at the failures and conclude the category is invalid. The correct read is the category is power law distributed with extreme rewards concentrated in the few stories that compound for decades. That is exactly what belief has always done, and crypto is just the first time we get to underwrite it like equities. So here's the thing the peanut gallery refuses to hear. Markets are not mechanical truth-finding machines. They never have been. They are democratized global consensus engines for what we collectively agree is valuable. And the agreement itself is the asset. Religion has run that play for 5,000 years and built an economy the size of a G7 country. Nations have run it for 300 years and built sovereign treasuries. Corporations have run it for 200 and built the modern economy. Crypto is running it now with a 24/7 order book, global participation, and no permission slip required. That isn't degenerate. That's the same thing humans have always done with belief. The only difference is now you can express your conviction in basis points. You don't have to like it, you don't have to participate in it, but if you want to remain analytically honest, you cannot say it has no value, because to do that, you'd have to claim that religion, friendship, meaning, and belonging had no value either. And you know that's not true. Murad's thesis isn't crazy. It's just operating one level of abstraction above the place most people are willing to think. Once you climb there, the entire market looks different. The real project versus memes debate dissolves. The what's the utility question gets replaced with the only question that ever actually mattered. How strong is the belief, and how long can the story hold? That's it. That's the whole game. And that's what Murad has been saying. The rest of you are just catching up.